Welcome to A Few Minutes with Peter Grandich. I'm your host, Al O'Grady, and for the next few minutes, we'll be talking to Peter, getting his insights on the markets, commodities, business, politics, sports, and life in general. Peter Grandich is the editor of the Grandich Letter, which was first published back in 1984. He has been a market strategist, a portfolio manager of 4 hedge funds, a mutual fund that bared his name, and is widely known for his accurate forecasts and no-hedge markets perspective. He appears regularly on television and radio and is widely quoted in leading financial publications. He's also the co-founder and managing member of Trinity Financial Sports and Entertainment Management Company, an insurance and estate planning firm specializing in servicing professional athletes and entertainers. Peter, as always, welcome back to the program.
Good to be back in more ways than one.
I'll bet. And you know what? We're going to delve right into that right now. Before we get into the business end of things, Hurricane Sandy, of course, making its mark in the northeastern U.S., touched you personally. Tell us about your experiences with Sandy.
Well, both my business and my home resides right in almost the border of Monmouth and Ocean County, which was almost where Hurricane Sandy came ashore. Now, many have seen the devastation of the Jersey Shore, which went all the way into Long Island and Staten Island, which was especially hard hit. Basically, anywhere from the water line to several blocks in to a half mile or so, no matter where you were, is devastation. That's just the fairest and simplest way to describe it. There's almost nothing standing, and almost nothing is recognizable, and anybody associated there, whether living or business-wise, has been severely damaged or totally destroyed. And it's not believable till you really get to see it. And I got a chance to go because did something a little you're not supposed to, but used some friends in the state police and got a guy onto what's known as Long Beach Island. And I saw it firsthand, and I saw the same things when you saw our governor walking the shores. And it's just something you don't fathom till you see it. And so in a state where so much is tourism and the bulk of it comes from the Jersey Shore, I think after the shock and the natural hurt that people have, when the thoughts of rebuilding comes along, there's going to be a lot of questions about that. You know, one of the difficulties I've had personally here, and I don't want to call it a difficulty compared to what the other people had, but the insaneness is, as you know, we had a Hurricane Irene last year, followed by what we've coined the superstorm. And one of the reasons, by the way, just so you know, it was changed to superstorm versus hurricane was a little break that the government threw homeowners and business owners because it wasn't classified as a hurricane that came ashore in New Jersey. Insurance companies were not able to implement the hurricane factor, which means that instead of our normal deductible, which could be as low as $500 or $1,000, if it was a hurricane, they had the right to make a 5% deductible, meaning the first 5% in damage the homeowner would have to eat. But nevertheless, what I've never understood here is we had the storm, which was then followed by, just so you know, we had a very freakish snowstorm. In fact, my town was one of the 2 towns that had the highest snowfall. 13 inches, which normally doesn't throw us for the loop, was followed right on the back of Superstorm Sandy, and it actually caused more trees to come down than this Superstorm Sandy did because they were already weakened in the heavy snow, and that caused a whole amount of power outages. And what I'm driving at is they've put up the same pole 3 different times over the last year. That ends up knocking our particular power to the development I live in. And one of the things I think that's going to come addressing all this is how power is distributed, grids, what have you, and the fact that even in the 21st century, much of our electricity power is still transported above ground versus underground. So there's a lot of things coming, but to answer your question, me personally, nothing. The slight inconvenience of power off compared to what devastation people are facing, I don't even like to mention the power being off because it really wasn't a problem. But I do think it's going to bring into question the infrastructure, not only in New Jersey and the Northeast, but elsewhere, and how power is distributed, and deregulation. You know, much is talked about the deregulation in the banking business and how it impacted the financial world and has led to some of the problems. Well, one of the issues that has come about in this is, especially when power company workers from other states were kind enough to come and work here and help us get our power back, many of them have been interviewed, and they've spoken about the archaic system that we have here and old parts and what have you, and that comes from so-called experts from the fact that deregulation took away the profitability, and most of the power companies have been running on a just keep it up and we'll worry about fixing it later mentality. So there's a whole host of things that are going to unfold from this, but right now people are still in shock. There are many people right on the water who not only don't have power now, but are not going to have it anytime soon, because it doesn't make it possible when 70 or 80 or 90% of other people around you are destroyed for the power companies to come back and try to run power to you when 8 or 9 of your neighbors have no way of getting it.
Two follow-up questions, Peter. When do you think things are back to normal in your neighborhood?
Well, I don't think it will ever be normal again. I don't think, I hate when we say Jersey Shore because people think of the show, and, I've been a little upset, not that I watched the show, although I knew my daughter did before she went off to Australia for a third year of college, but I was disturbed that none of those people who've made their lives out of it have seemingly come about to help. But the Jersey Shore that we've known about and so forth, I don't think will ever be the same again, because one of the things I think is going to come of this is when the enormity of the cost, right now people aren't thinking about the cost, we're just trying to save lives and try to repair things and get things moving forward again. But one of the concerns are going to be is, and science continues to show it, and it was an argument that's been, since I moved to the Jersey Shore area in the 80s, has been talked about, and it finally happened, was that the rising sea levels and all these other things may prohibit, or decisions will be made not to rebuild the shore in the manner that it used to be. So I don't think it will ever be the way it was, but I don't think we have any indication the way it's going to be, and we won't have that for several months.
Okay, let's move on. There was an election. It was in all the papers. President Obama reelected, and your overall assessment on the situation.
Well, I'll try to keep much of my personal observations out of it and try to reflect on it, but it's hard for me to do that because you and I have had umpteen conversations for the last couple of years about my belief that per the election and afterwards, America was going to enter, I've said it numerous times, a period of economic, social, and political, and even spiritual upheaval, I've described it as. Now, I thought it might start sometime after the election, but it may have started right on the election. And so as 50-point-something% or whatever the number was, certain people are happy about the election, I have grave concerns about the election. It is what I've said from day one. I never felt that the election of Romney was going to turn things around. My comments were that it would slow down the progression we were in, but an Obama win would give full throttle towards the upheaval that I spoke of. And I'm more clearer now, in my opinion, than that. I've used a description which apparently some people don't like because I've gotten some nasty emails, but I've also gotten a ton of supportive emails, but I'm not going to change because of either side what they're saying. Some people have called what we now are is a Santa Claus environment, that people are going to continue to expect gifts. They don't expect to have to do anything really for it, and that we become an entitlement nation, and this will only accelerate that. I believe that's true, but I also believe those who felt that it was coming and thought they would try to do something about it might say at the onset that they want to do everything they can to prevent that, even though it looks like 4 more years of the same. But I think the reality is going to hit them square in the face over time. And I think one of the big problems we're going to see in America accelerate, and I haven't seen this spoken yet in much of anything that I've read, is an acceleration of capital from Americans moving out or offshore. And I mean legally. I'm not speaking about people, moving it offshore and trying to hide it. one of the things that's clear now, and I think one of the reasons the market had been weak of late, although I said that I expect the stock market to rally into year-end, is just the simple fact and known fact that because of the Obama win, there's really no expectations now for the tax cuts that had been in place to stay in place. So businesses, people that own investments, particularly stocks, are going to face at least almost a 10% hike in capital gains costs if they wait to January 1 to sell something that they can sell before year end. And if you're a business or somebody of means and you have hundreds of thousands or millions or tens of millions of dollars of gains, the 10% difference makes a whole lot. And I will tell you something from my other business, which is involved in estate planning. Probably got more calls from the election day to now than we got in the last 3 years combined from people very concerned now about what's going to happen with estate taxes and other inheritance taxes and others, because they feel things are going to fall back and much lower thresholds before taxation starts. And, of course, everybody's now trying to jam everything in and trying to do it before year end. So I guess to answer your question is all what I had feared beforehand has come to roost as far as I'm concerned. And anybody that thinks somehow parties, particularly the Republicans, are going to cave in and sing, Nirvana, holding hands with the Democrats on the steps of the Congress, I think is sadly mistaken.
Okay, you're kind of circling around. You never actually use the phrase, but I mean, watching CNN, they've been talking about a fiscal cliff year end, and I think you're kind of circling around it. Your thoughts on the so-called fiscal? Well, I shouldn't call it the so-called, the actual fiscal cliff that'll be happening. As we get towards year end.
Well, there is a cliff. There's not circling about it, but I go past the cliff. Somehow people think, okay, we have to deal with this fiscal cliff, and somehow, okay, maybe you don't take as much, away here and there, and then we're all going to be chaos. I think it's much bigger than the fiscal cliff. First of all, I don't expect and I don't anticipate great movement to change the inevitable that's coming now. I don't see the Democrats, after winning in the manner they did, and the perception that's being shown in what is clearly a favorable media, overall media for them in the United States, is that they're going to suddenly give in and not seek all the things that they said they wanted in terms of taxing more of the so-called wealthy, what they view wealthy, taking back a lot of things that were, done during the Bush administration and so forth. They may talk about that, but I see them as them feeling this is their chance to really enact everything they did. The real decision-making is going to be on the Republican side. Are they going to stand tall and think and stand the way they felt their platform always going to be? Or are they going to cave in and say we need to regroup because we need to reshape ourselves because the demographics of America has changed and we have to change with them? I think that's the unknown at this point in time. But the fiscal cliff, no matter what actually transpires come in January, I think the far bigger story is how much America has changed, and what we all thought, well, I shouldn't say what 50% or so of us thought America was about and what it stood for and what it was like 30 or 40 years ago went poof on the night of election. I really believe that. In my heart of hearts, I really believe that. Does that not mean that somehow over time it can get back to that? I personally don't think we'll ever see the America that my parents had and I grew up in again. And that's simply because of the demographics. But how far we've moved from right to left is going to be the argument. And I think we moved far more than even people imagine at this point. And it's going to be very hard and somewhat painful for those of us on the right to deal with it. But one thing I will remind you, much of the wealth, as I've stated over and over again, is in the age group of 55 and over. And the demographics of that wealth is still from the old school. And so that's why I think, and based on what I've just seen in this last week, of people of means seeking to hide and shelter or even move that wealth because of fear of how they feel this government's going to want to take more and more of it, I think is a picture which overall is unfolding all around America, may not be on the front page of news, but is what's happening among the people that still have wealth in America. And I must tell you, you heard me say this so many times. We had a preview of this. It's called Europe. And this is exactly after World War II, what unfolded in Europe. And then we've seen most recently what happened because of that, when countries became so socialism and secularism and entitlement-oriented, what transpired. This is what I feel America was moving to, and I think the election has accelerated that process.
Okay, let's move on. Let's talk about the stock market, starting with the stock market in your country, in the U.S. What's going on?
Well, I just think there was initial concerns after the election, but I've always felt that the stock market is basically run by a group that I've coined the Don't Worry, Be Happy crowd, and I suspect in an era between when it becomes Santa Claus-like on the stock exchange, regardless of what's happening in politics between our Thanksgiving and year-end, that we'll see much of the recent decline after the election taken back and moved to the upside. Ideally, for me, I would like to see that happen because I would think the ultimate shorting opportunity for the stock market would come soon after it made a new marginal high. I don't know if we're going to get there. I'm going to judge a lot on what takes place in the next 4 to 6 weeks. But no matter what transpires, if you're asking me about a market 1, 2, or 5 years down from now, I think it's going to greatly underperform others. But as bad as, and I don't want to skip ahead, but as bad as equities are, bonds will be even worse. But I continue to think that if you are going to be in general equities, you need to be overweighted outside the U.S. and very underweighted in U.S. equities.
Okay. You had mentioned bonds. Why don't we continue that? So we've talked about bonds on lots of previous shows. You're still calling it the worst investment for the next decade?
Oh, no question now. In fact, if there was any doubt lingering, it was removed with this election. There's no question that it's going to be full speed ahead with QE to the infant, not just 3, and the creation and continuous creation of money to pay more and more for stuff will eventually lead to the debasing of our currency and, of course, how people will view us around the world. And like I said, what we saw outplay in Europe is coming to the shores of America. And the absolute last place that I would want to be in that is bonds. I'd sooner own U.S. equities before I own U.S. bonds. Okay.
The U.S. dollar, you had mentioned about the U.S. currency. You've also described that as being on life support. How would you describe the U.S. currency right now and also maybe heading into next year?
Well, one of the difficulties now is, especially in the currency market, most of all bets made are made by our Thanksgiving. So we have a couple more weeks of legitimate activity, and then the market begins to dry up. Liquidity becomes very short, and moves get artificially done. Longer term, as we get into 2013 and move forward, I think the dollar will turn down again, and particularly once it becomes evident that there is no new nirvana in America, that it's more polarized than ever, and less things are getting done as we get into the summer and fall of next year, then we'll see a real decline in the dollar. And that will coincide what I believe will be of movement in Europe, which at that point in time could actually see Greece had come out of the European Union, and a perception in Europe that things are not as bad. And we see that, although it's not getting the coverage, we see that now in long-term rates and short-term rates in many of the European countries have fallen 50% in terms of saying that 10-year might have been 6 or 7% 2-3 months ago. It's now 3 or 4%. So I think as 2013 unfold, the problems in Europe will dissipate compared to the increasing problems that will be in America, and the dollar will suffer because of that.
You know, maybe about 6 months, 9 months ago, Greece, and there were other countries, Ireland was another one, Iceland, I think Spain, talking about countries really having severe debt problems. I mean, that was really front page on the business news, 6, 9 months ago. It doesn't seem to have the same punch. Has the problem alleviated at all, or is the business world just kind of bored with this story?
I think it's more perceived alleviated, and one of the reasons is perceived because it's what I said to you, that rates have dropped dramatically in those countries, not in Greece, but in the countries that many people still feel are going to be part of the European Union and can rebound. Ireland is the perfect example. It's probably the leading candidate. It's probably made more progress on reversing its woes than any other countries that were supposedly had woes to begin with. So I just think it's part of the changeover we're going to see in the focus on financial world markets moving from Europe to next summer, fall to the United States when what I believe will be somewhat of a chaotic political system followed by a declining economics picture and just a polarization that people will conclude has no positive outcome. And so, I just think, we probably have somewhere between 1 and 9 months left of an era where that won't really take hold. But you want to be in that era, moving away from U.S. assets and looking elsewhere.
Okay. When we were talking about the stock market earlier, just to follow up, I should have asked it at that time. Here we are in November. Traditionally, a lot of tax loss selling is going on. Is that still going to be happening, or do people really have gains where they can, have tax losses that they can actually sell off?
It's really interesting because it goes back to what I said before. Tax loss maybe in the junior market may still exist, although I think the bulk of that has been done there as well. Tax selling has come earlier and earlier this year because people look to sell earlier and buy back in the same year. But tax profit selling is a situation in America only because of the coming change in our tax structure. So people that have gains that normally like to wait to January 1st or 2nd because then technically they don't owe it for another 13 months are actually going to be selling before January 1st because our tax rate on capital gains is going to go up 10% effectively come January 1st. So profit taking for selling tax purposes is probably a unique situation that normally wouldn't happen, what we're facing now. And I think we had that after the election, and we've probably seen a good part of it, but I think people will have that in the back of their mind right up to December 31st.
Okay, let's move forward and talk about precious metals for a second. All year long, Peter, and for the last couple of years, you've been calling gold the mother of all bull markets. Has the mother lost any of her shine at all, in your view?
No, not at all. In fact, I think what's been most interesting, we know that earlier in this year, it was easier to find a needle in a haystack than somebody that was still very bullish on gold. Everybody thought in the low 1500s to call the top, although I couldn't find anybody to accept my bets about that. But nevertheless, it was a dime a dozen to find bears. Gold has managed now to get above 1700 yet again. There is a well-defined resistance now at the 1800 area. The market has moved 3 times there and has not managed to get above that. But at the same time, it has shown that it's in tremendous support in the low 1500s. I do think, as I noted earlier today in my own blog, that one of the first numbers we need to get above is the current 50-day moving average is around 1743. I think if we get 2 consecutive closes above that, we will once again challenge the 1800. But a very unique opportunity has come up for anyone looking to add to or first buy gold. This 1800 area is so critical and is what's commonly known as a triple top that if and when it's broken to the upside, we'll get a lot of calculations that'll add $200, $300, $400 to the price because in the manner of technically how long it's taken to get through that. So perhaps one of the safest bets for those who are willing or wanting to buy more or buy for the first time is give up the $80 or so now between now and 1810 or whatever the number ends up being, and be more certain that if you do get to that number, that it's more likelihood it's going to move higher than it looks right now. And I think that will be the tip-off and finally allow us to get to that 2,000 number. Because when we do break, and obviously I believe we are going to break through it, there are a lot of technical calculations already that are going to come up with numbers like 21 or 2200. So a 2,000 print, I think will be in our future not that long after we break through 1800.
Any correlation with gold and the time of the season? I mean, this could be an incredible stretch on my part, and if it is, well, so be it. But I mean, here Christmas is not that far off. Guys buying jewelry for their spouses, girlfriends, etc. Increased demand for gold, reflecting in a higher price for gold. That could be a stretch on my part. But do you find?
It's not. It's not. This is actually the best seasonally favorable period of time now, from early November through February. For the Christmas holidays, for some holidays that take place in India and the Middle East, and of course Valentine's Day. We must never forget, and it seems to be lost all the time when we talk about gold, that almost 2/3 of gold demand is still from jewelry fabrication and jewelry demand. And although some people buy the jewelry as an investment versus for the love and having a beautiful pin or what have you, that this is the most favorable time for it. So there is a benefit to it and a support. But I think one of the fundamental stories that are out there that's not getting a lot of talk, and that is with the new Chinese regime, there's been a lot of things where the Chinese historically have used certain press agencies and certain groups in China to make it known what they're thinking. All in the last week have talked about them greatly increasing their gold reserve holdings. So I just think, to answer your original question about the mother of all bull markets, everything's intact. We do have some technical resistance we got to get through, but if and when we do, I think it's the launching pad for 2,000 plus gold. And as I've said since election night, $2,000 gold now with another 4 years of Obama is going to be cheap. I do think it's going to go a lot higher than 2,000 in the next 4 years.
Okay. Any other thoughts regarding other precious metals, silver, and we can also talk about base metals, copper, nickel, etc. Any thoughts you'd like to share with us right now?
I heard so much in their general media how well the financial markets did during the first Obama administration, and that was their pitch to say the next four can be as good. But I put up a chart this morning on our blog that came from Deutsche Bank that showed all major financial assets and how they did during the first Obama administration. And the first two by far were silver and gold. So I just think as terms of gold and silver going, it's the same as usual. I don't know as much about base metals because base metals are what they are and they're more driven by economics. And I still think, economically around the world, things are not going to be rip-roaring. So I continue to favor precious metals over base metals. I think base metals could be part of one's portfolio, but one would want to side more on precious metals than base metals.
Okay. Oil, natural gas. We're heading into winter. It's getting colder. You've got to be thinking there's a greater demand for oil and natural gas. Is this going to be having an impact in terms of its world price?
Oil is still going to be driven by what may or may not happen in the Middle East, but, an $85 to $100 trading range is where it is now. Natural gas is going through what I spoke of several weeks ago, a seasonal bounce. You certainly don't want to be short natural gas at this point, but I don't think it's the beginning of a tremendous change in the price simply because there's an abundance of it. I think interesting news that came out in the past week, which wasn't discussed much, and that is about the target of some now that America will actually export more oil by the year 2020 in Saudi Arabia. And that's really hard to understand and why, we still have such high energy prices, but that's part of the refinery issue and other factors that impact us. But all in all, I think oil remains in a bullish mode, and natural gas is going through a seasonal bounce.
My jaw just dropped. You just said the United States could be exporting more oil than Saudi Arabia? Producing
more oil than Saudi Arabia.
Yeah, okay.
Yeah.
There is a difference, okay.
Yeah, but, even that thought, because, when we think of Americas, we think we're all just tied to the Middle East and, they control our lives. But, the energy issue is a story that I don't think is going to be favorable over the next 4 years simply because I don't think the Obama administration demonstrated a love for it. I mean, if coal business, I think you're facing some really tough times. There's no question that this administration wants to rip apart the coal industry. I wouldn't go near coal stocks or anything to do with coal until further notice.
Wow. Okay. You'll stay away from coal stocks. We've talked about economics at a macro level. Let's get down to a micro level. Any individual companies on your radar right now that you'd like to talk about?
Well, I guess I'll just stick with my portfolio and my clients, which makes it highly biased. But just before we went to record this, I put up a thing about Alderon iron ore. We just saw a story break on Bloomberg that China now expects to make record imports of iron ore in the fourth quarter. I think that market has been way overdone, and a company like Alderon Iron Ore, which I've been a heavy buyer of in recent days, is very undervalued with all prejudice of mine. I just don't, it's the junior resource market is in need of and continues to go through a shakeout, and in all shakeouts, the babies get thrown out with the bathwater. And like I said for months now, I don't expect those babies that got thrown out with the bathwater to really separate themselves until we get into 2013. But for those that are in a position to shop, of course, this is the time you want to shop. And I just look at some companies and knowing where their projects are, there's no rhyme and reason between where their projects are and their share prices, whether it's Donna Metals, Geologic, Sunridge Gold, Spanish Mountain Gold. They're just the market is not coming close to fairly valuing them if you use any metrics that have been used in the last 50 years. But there's nothing to greatly drive them higher anytime soon, and it won't be to 2013. So if you're very short-term oriented, you can wait a few more days or weeks. If you still believe long-term is only a year or two, then these things at these levels, for those who have speculative interest, which means you're ready to prepare to lose part or all your capital, I think there's compelling, purchases at this point.
Okay, I think that pretty much rounds things out as far as our discussion is concerned. Hey, Peter, how do you like them Cowboys?
Well, for 4-5, they're not bad. They did me a little favor. They knocked any hope of the Eagles making anything themselves. I think they're done. I mean, look, the football's probably more balanced now than in the last 20 years.
You're absolutely right. You're absolutely now. Is that a good thing or a bad thing for the NFL? I mean, is it like
I think is
it a mediocre league?
No, I think it's a good thing, and I'll tell you why. There's that many more fans that still come late November, aren't like a Jet fan or an Eagle fan now going, oh, God, here it is, we stink again. And so there's a lot more competitiveness, there's a lot more hope, and there's a lot more interesting games. Games aren't very one-sided. There's not a continuous just one team or two dominating. It doesn't seem like anybody could beat them. Even the best of teams or teams that were doing good for 2 or 3 weeks suddenly lose to a team that no one expected them to lose to. I think that's good for sports. I mean, what I feel bad, I just can't believe there's no hockey. I know I'm speaking to a Canadian.
Yeah.
But I can't imagine that neither side has concluded that what they're doing is only extremely damaging to their viability going forward. And if I could speak to the world now of people, fans in North America, it wouldn't be about politics and all. It's just that nobody go to a hockey game. That's the only way to teach it. I know that's not going to happen because everybody's going to want to go to a hockey game.
Yep.
But just don't go.
Yeah,
Let them have a season and no one be there. They'll never do that again.
I felt that way after the 1994 Major League Baseball strike.
Right.
I felt that way. I mean, you vote with your wallet. Let's face it. You vote with your wallet. And when you have professional sports, let's face it, it's a business. It's a business, and you have billionaire owners fighting against millionaire players, and the fan is the one that loses, and the fan really has no sympathy for either side.
No, it doesn't. But the real losers are people that work and make barely a living, working within the sports industry,
True.
selling stuff, etc. They're totally forgotten about this. There's always a token thing at the end when they finally conclude and so forth. But it's very difficult. And hockey to me, as an American, we have a team down here that won 3 Stanley Cups, and you can go in a local sports bar and they can't name 5 New Jersey Devil players.
Right.
So it's not perceived in the same manner as in Canada. But it's the one game you have to see live. It's just it doesn't really show itself on television.
Yeah, it's a fast game, sure.
Yeah, but it's so more enjoyable live than television. I mean, football still fairly good on television if you're not at the game. I believe hockey is people that never saw hockey and only seen it on TV change their opinion when they finally go to a game for their first time.
Mm-hmm.
And so I think there's such a desire for it that people like hockey that the moment they settle, we'll just go back like it didn't happen. And really, we should do the opposite.
Exactly.
It's the only way, but unfortunately, we won't.
Yeah. And you know what? Just as a footnote, I'm going to be having my vacation of a lifetime. You and I were talking just before we started this interview, and I'm heading down to Dallas, Texas for your U.S. Thanksgiving. My wife got me the vacation package of a lifetime. I'll be on the 50-yard line watching my Cowboys destroy the Redskins and get a tour of the facilities, and I'm really looking forward to that.
Well, I wish you well. And, when I watch Dallas play the Redskins, I root for a tie. But in this one case, since I know you're there, I'll kind of root for them that day.
Oh, well, thanks, Pete. I really appreciate that. Hey, listen, what's going on is I was reading this morning Rex Ryan could be on the chopping block.
I think they're all on the chopping block. What I think the worst of what happened is this Tebow move was just a political ploy because they were getting so beaten up by the Giants unexpectedly winning the Super Bowl that this young man, you can argue whether or not he's a great quarterback or not, but he's brought more excitement to the game than anything in a long time, was used as a pawn and is suffering through this. And the Jets never really intended to all the things they said before the first game on how he was going to be part of their offense and all. It's clear and evident they never planned that. And now I think the biggest problem they face is if they do bring him in and he wins enough but not enough to get to the playoffs, they'll be viewed even worse than if they never bring him in at all. So I'm a Tebow fan because not just because of where he stands personally in his life, but he just brings an excitement and a raw love. He's like a fan that plays the game.
Yeah.
Every time he's interviewed, it's always the same. It's not. He loves it. He wants to win. He's the ultimate team player, and it's a shame that he had to have a stop here. And I only hope that he gets a chance somewhere else next year because it's clear and evident that the Jets did not intend to. Now, if the media comes enough pressure and they cave, and he does become a one-man wrecking crew, because you remember when he came in Denver, they changed the scheme, but they never thought they were going to win with him.
Right.
He even surprised the owners, and so. I just don't see the Jets not at least giving him a chance if they lose again this week, and but I hope for his sake because he's I'm around athletes in my other life, and you just don't find young men like him, just in everything about him, and I just hope he has a chance to bring his excitement, his desire, and his true team spirit to a place that would be appreciated because it's not being appreciated here by the Jets.
Okay, fair enough. Of course, next week, U.S. Thanksgiving, and as I mentioned, I'm going to be stateside. I'm going to be in Dallas. So, Peter, let me be the first to wish you and yours a very happy Thanksgiving.
Well, thank you very much. It'll be somewhat tempered knowing what has impact here, but you're right. We need to be thankful for just whatever we have because even despite what we think is terrible, somewheres around the world, it's a lot worse.
Absolutely. And we'll be talking again in the early part of December. This interview appears on my website, corporateinterviews.com. It can also be accessed on YouTube and iTunes. Just type in Grandich in those respective search engines to not only access this interview, but interviews that we've done in the past. Now, if you have any questions for Peter, by all means, send me an email. My email address, very simply, al@corporateinterviews.com, and we'll certainly do our best to mention it on our next program. For Peter Grandich, I'm Al O'Grady. Thanks very much for joining us.